Hello everybody, this is Crypto Amadeo. Welcome to my channel where we take a fresh perspective looking at the world of assets through both fundamental and technical analysis. And today we're going to look at Bitcoin and try to answer the question, why should anybody care about Bitcoin? Why should you care about Bitcoin? I think anybody who cares about either maintaining or increasing their purchasing power over time should care about Bitcoin. This is because I think Bitcoin is a very good asset that provides a lot of fundamental values to society, to users, and it's still a very young asset in terms of its market cap. So here we are on the Bitcoin page on CoinMarketCap, which is the biggest crypto site that has a whole bunch of information about thousands of coins. And when people look at this number, it's $58,000 per Bitcoin right now. They get scared a little bit. A lot of people get scared a little bit, thinking that this is very expensive and it's too late for them to get in. But in my opinion, you should never judge whether something is too expensive by looking at the unit price. Instead, you should look at the market cap. This is because the unit price doesn't really mean anything if you don't look at the market cap. Take Tesla as an example, right? The market cap right now is 7 billion. And there are, if I just scroll down, there are 1 billion outstanding shares out there of Tesla stock. So if I were to combine this into one share, right? If I were to do a reverse split and combine the 1 billion shares of stocks into one share, then that one share of Tesla would be worth $800 billion. And my question to you is, can you look at that number and be able to judge whether Tesla is too expensive? No, you cannot, because there's a whole bunch of other information you need to take into account when making that determination. So coming back to Bitcoin, I do not think Bitcoin is too expensive, judging from market cap, and which is sitting at 1.1 trillion. And let me explain to you why. So if you look at this is a website called Bitcoin Treasuries that records the public company, the ownership of Bitcoin by companies, by non-individuals, right? You got publicly traded companies here, you got private companies here, you got government, you got ETFs, and you can see some of the names you probably are familiar with is Tesla, Square, MicroStrategy. That's a smaller company that recently got pretty famous for buying Bitcoin. The CEO is Michael Saylor, he's actually a very, very knowledgeable engineer who explains Bitcoin from the engineering perspective very well. I encourage you to check it out. But anyway, you can see MicroStrategy has 90% of its value in Bitcoin. The whole company is worth 7 billion. Its Bitcoin is worth 6.5. So that's a lot. And Tesla and Square has obviously a smaller, is way less aggressive in terms of holding Bitcoins. But the trend is, the recent trend is that these companies, these non-individuals, are starting to hold Bitcoin. And if I just take you to this, the report that I found, not this one, of Kathy Wood, talking about the fact that, per her companies estimate, if companies like MicroStrategy and Square continues to diversify their cash into Bitcoin, and institutional investors start to allocate at least 5% of their funds toward Bitcoin, then we could see a price of at least 500K of Bitcoins per Bitcoin. So that's Kathy Wood's prediction, assuming this happens for you. Anyway, coming back to this, so here is the good side that tracks, the non-individuals and their holdings of Bitcoin. Coming back to this, so why are all these people holding Bitcoin? Why are all these companies holding Bitcoin? I think this diagram answers that question very well. So this diagram really explains the fundamental technology that is behind Bitcoin, right? So that technology is called blockchain. Basically, what that is I think it's easiest to understand that when you compare it to a traditional system. And this diagram does it very well, right? So if you look at the diagram, in the traditional system, banking system, right, you got users, and they all interact with a central party called the bank, which controls the ledger, which is a database. that records all the transactions. So if he sends him money, he sends her money, she sends her money, all those transactions are recorded in this database by this bank. So it's controlled by one party. And as you can see, because it's controlled by one party, this database can easily be manipulated as well. If the bank says, hey, you know what, I'm gonna create this additional account and call it whatever account and dump new USD dollars into that account and start loaning that out. They can do that. The bank can do that, and that would obviously dilute the value of the holdings of the US dollars of the existing individuals. But that is exactly what's happening right now. In fact, through the financial system, central banking system. But on the other hand, if you look at the blockchain system, it has no central party controlling a central database. What it has is a whole bunch of miners basically maintaining numerous databases within the network recording the same transactions. So for example, if he sends him a transaction and he sends her a transaction, all those transactions are first validated by the miners and then finalized and recorded in numerous databases throughout the world, right? So not a single party can manipulate the system at all. Not a single party can either change records or add new Bitcoin to the system, to the Bitcoin network. So that makes the network very secure in that respect. So this is where the value comes from, right? This is exactly why individuals and companies are starting to buy Bitcoin, because they don't want to be diluted. Because if you're in this system, the central party can change this database and dilute the value of what you hold, right? And let me show you the dilution in a very visual manner. And this is the chart published by the Central Bank of the United States, the Federal Reserve, right? It's money supply. It's the United States money supply, which is the total amount of dollars circulating in the United States. And as you can see, there were about 280 billion in 1959, and by 2021, which is August, there are 20 trillion. You see the growth is tremendous. And this dilution, this increase of money supply, increase of the amount of circulating dollars is a direct result of this system and how it's controlled by one party and it's easily changeable. Right, so this is a direct result of this system. And now we look at this, right? So you asked me, so we know that Bitcoin is sitting at 1.1 trillion of market cap at the moment as we speak. So why does that make Bitcoin young? Why is that a small market cap? So here's my understanding, right? If you look at this site, right, it really gives you a market cap comparison between Bitcoin and all fiat currencies. Fiat currencies being your yuan, your dollar, your euro, your yen, your pound, right? And if you scroll down, Bitcoin is only number 14 right now, right? It's only number 14. And if you look at USD, right, it has circulating supply of 20 trillion, which is consistent with this M2 chart, sitting at 20 trillion by 2021 August. USD has 20 trillion USD out there circulating, which is worth 370 million Bitcoins. This amount of dollar is worth, this 20 trillion US dollars is worth 370 million Bitcoins, right? Everything is measured in Bitcoin and ranked by that market cap, even though this is way more than the total max supply of Bitcoin, which is 21 million Bitcoins max supply, right? So to me, if a portion of these users of these fiat currencies switch to Bitcoin in terms of for its store of wealth, utility, then there's a lot of potential for this for the Bitcoin to grow. The Bitcoin market cap to grow. There's a lot of potential for the Bitcoin market cap to grow. So that's my understanding. And now you look at this. This is Bitcoin against companies. As you can see, Bitcoin is sitting at 1 trillion, right? Apple is sitting at Microsoft, Alphabet, Amazon, Tesla, all these companies, right? So it looks really big, when you compare it to the companies, right? It looks, Bitcoin is 1 trillion. It kind of looks kind of big, but the truth is, Bitcoin is not just one company. Bitcoin, the value that Bitcoin provides, I would argue, is way bigger than any of these companies provide. In fact, an entire economy can be built on Bitcoin as a second layer, which is exactly what's happening right now already in a real economy. Like you see PayPal, Square, even Twitter, and PayPal, Square, Twitter. A lot of companies are building on top of the Bitcoin blockchain as a second layer to utilize the Bitcoin network. So what we see is that is an entire economy being built on the second layer of Bitcoin at the moment. So that's that. And here is a chart that compares Bitcoin to gold and fiat in terms of the attributes of something called money, right? And as you can see, there's verifiable, fungible, portable, durable, divisible, scarce, established history, censorship resistant, unforgeable costliness. All these are different attributes of money, but Bitcoin almost beats the other two at almost all categories, except for beats or ties the other two at almost all categories except for durable and established history, which I don't understand why durable Bitcoin is scored as moderate, because it doesn't really deteriorate. So maybe I'm missing something there, but out of all these attributes, the most important is verifiable, is being verifiable, easily verifiable, and portable, and divisible, and scarce. Verifiable just means how easy is it to verify the authenticity of Bitcoin. If I have a Bitcoin wallet, only if you hold real Bitcoin and send me real Bitcoin can I receive the Bitcoin. So it's very easily verifiable. Whereas if you pay me a chunk of gold, I don't have to have experts to examine it before I can accept it. Same with fiat money. Although fiat money is arguably more verifiable than gold. Portability wise, obviously gold is the worst, right? You can't really transfer gold, which is why nobody really owns gold. Everybody just owns paper gold. Not everybody, I'm saying like a lot of people just owns paper gold through a third party, and there's your third party risk. And durable, or you talk about durable, but divisible, gold is not divisible. Fiat is somewhat divisible, right? But you could argue electronic fiat, right? Like if units of electronic US dollars is divisible. But Bitcoin, was born electronic, and it's divisible. You can divide Bitcoin very well, and be able to send people a fraction of a Bitcoin. Scarcity wise, Bitcoin is the highest. Right, there's only 21 million total Bitcoin units of Bitcoins max, which I believe there's only 18 million right now circulating at the moment out of the 21 million max. So, but there's a cap, right? So that's why the scarcity is the highest for Bitcoin. For gold, I think every year gold supply grows like 1 or 2%. You could pretty much consider that as way better than fiat, right? Already, fiat is just like there's no stable percentage of growth every year. It's just really depends on what the economy, what happens in the economy, and how central banks and government thinks how much they think they need to stimulate the economy. They need to, the more they think they need to stimulate the economy, then they need to add money supply, which dilutes the existing fiat money, and then makes it less scarce. So here's a little chart, nice chart comparing these two things in terms of from a monetary perspective, right? Like the money attributes. So here's a snapshot of basically, the quick fundamental information about Bitcoin and why I think it has a ton of potential of growth, right? And next time I intend to really show you guys, go into the more technical part of it, looking at the charts, and show you guys why I think Bitcoin, just technically, based on my technical analysis of Bitcoin, of the chart, I think that it has a lot of potential to grow, right? And well, for example, right now you're looking at a channel, right? It looks like a channel, but those of you who might know a little bit of technical analysis might recognize this as a rising wedge, which is actually bearish. Eventually a rising wedge, at the end of the rising wedge, when the space gets too narrow, it breaks down, right? Just like this. But I argue that, I don't argue, I just see that the way I see that the Bitcoin chart is that it's not really a rising wedge. It already broke out of a rising wedge. So because the space is not getting narrower between these two lines. If you connect the dots, right, draw the line well, and if you look at it this way, if you look at it from a 12-month interval, right, it's easier sometimes if you just make the interval big and look at the chart over a wide range of time, right? So if this is 2017, so because of 2017. This chart is not a rising wedge. If 2017, let's say, like only touched like as high as here, then that would make it a rising wedge, and this will make it probably stop right here, which is I think 100K, and then turn back, possibly break all the way down to like way low, right? But because 2017 it did really well, it changed the whole picture. And let me get into that next time with you in a more technical analysis based video, and I'll see you there. If you like this video, please hit like button and subscribe to my channel, and I'll see you next time.